start, I'm going to say that we need to be sensitive to time here. We're starting a little late because of our problems with our links, and we have a 10:45 FFE meeting, so I'm going to try to move things along fairly quickly. So Steve, could we do roll call, please?
Sure. Chair Bob Salisbury.
Here.
Vice
I'm
Chair
here.
Randy Eberts.
Here.
Dean Burgee.
Here.
Dan DeMint.
Here.
And Sandy Doctor.
Here.
Okay.
Okay, introduction of guests. Steve, are there guests from the city?
Yes, I see we have Mayor David Anderson.
Hello.
Nina Porter is as Management Services Coordinator for the city. And we have Sean McBride, the CCTA Executive Director. And I believe that's it from the city. Christy, what do you want me to introduce the people from Zhang as well? Or would you like them to do that themselves?
Oh, I can run through them. It's just, we have Lynn Zhang, Katie Richards, Rob Nelson, and Rob McDougall. This is the staff that puts all this stuff together and makes it work. And the boss.
Okay, it says that we need to approve the rules of the remote meetings. So do we need a motion for that, Steve? Is that correct?
We do. I'll just kind of brief real quickly. This keeps us in compliance with the new executive orders issued by the governor. It kind of sets the rules for how to conduct electronic meetings, which during this period of emergency suspends our rule for requiring more than 50% or more in attendance in person. And it also sets the rules for how the public can participate, which is, for our meeting, we have them call in a separate line and then they state whether or not they're a member of the city, and then they have 3 minutes for their time. And then those will be played during the public comment section. And the only exceptions to that are any that are completely unproductive and inappropriate, but those are also kept for the public record if someone were to want to request and listen to those at another time.
Okay, and
So
so
this
Steve,
Should be approved.
so Dan, I had heard you say give a motion that to approve them. Do we have support?
Support.
Okay, motion and support. Any further discussion about those? I'll ask one question, Steve. Do we do the public comment at the end of the meeting? Is that correct?
Yes, we usually do ours on the agenda. It's called Around the Table. That's when we
Okay.
include ours.
So we'll do that around the table. Any other discussion? All those in favor signify by
I
aye.
would like to call this one by roll call, Bob,
Oh, sure, go
Just-
ahead, Steve.
to confirm. Okay, Chair Bob Salisbury,
Yes.
Randy Eberts,
Yes.
Dean Burgee,
Yes.
Dan DeMint,
Yes.
Sandy Doctor.
Yes.
Okay, thank you.
Okay, motion's carried. So then we have two sets of meetings to approve, the meeting of December 4th and the meeting of February 26th. The reason we have both is that when we had the February 26th meeting, we didn't have a quorum, so we couldn't approve those minutes. So can I have a motion to approve the minutes of both of those meetings?
I move
So
they both
moved.
be approved.
I
Support.
hear a motion support. Any discussion, corrections? All those in favor signify by saying aye or raise your right hand. Aye. Anyone opposed? Minutes are approved. So Steve, let's go through the assets, which are on page 14.
Sure. Would you like me to put those up on the screen here?
If you can do it quickly, that's fine. Otherwise, I think most of us have it.
I can do it quickly here. Okay, so on the screen, we have the assets. I will try to enlarge this a little bit. As of March 31, obviously a significant dip in the assets overall, due to COVID that hit right in the middle of March and really carried through the end of the month and even further. One thing I'd like to note on here is you notice our policy maximum, we're well over in Jennison. And in the fixed income, the large reason for that is that asset class actually gained $7 million from where it was at 12/31. while all the other asset classes dipped. So, we'll explore that a little more as we get to the liquidations and cash flow reports. But those are the assets as of March 31. Any questions or comments from anyone?
Okay, hearing none, let's go to Chris on the investment performance.
Why don't you scroll down a little bit, Steve, and I'll walk it through it. See, I really like this. You've got the narrative in front of you. I'll just take a couple of them. The market value of the portfolio assets decreased from 813.4 million to 650 million during the first quarter, a decrease of 163.4 million or 20%. That was brutal. The portfolio weighted average return for the quarter, net of manager fees, minus 19.03, one-year return minus 11.4, annualized returns since October of 82, net of manager fees through the end of the quarter, excuse me, 10.14. Let's, you've got it in front of you, you've read it, so let's just skip down to the final paragraph. The inflation adjusted or real return for the quarter was minus 19.47, as the inflation rate for the quarter was 0.44. With a one-year inflation rate of 1.54, the one-year real return was minus 12.95. Since we started in October of 82, the return on the portfolio net of manager fees has been 10.14 nominal and 7.52% real. Let's go to the first page with the page 8 of 71. I like it. All right. Again, the geographic exposure, 83% US, 17% foreign, all denominated in US dollars. Looking at the asset classes, again, you can see how we are significantly under our equity compared to our policy, 62.8 to 70. Fixed, we are over 31.8 to 25. Real estate is more or less pretty much on. Looking at the portfolio exposure for Jennison for the fixed income portfolio, two things I would like to point out. One, we've added, Katie added the performance attribution, which is the yield curve, what the manager did relative to the Barclays index. The manager, what this is saying, the manager contributed 54 basis points because of yield curve positioning, 33 basis points because of sector allocation, and because of security selection, about 136, for a total of 224 basis points. And when we get to inside the report, and we will have, let's see, on page 6 of 14, run there real quick. When you look at Jennison intermediate bonds versus the benchmark, you'll see that there's 223 basis points, 2.23% over performance. And that's what this little grid is showing, how that 224 basis points was arrived at. Going back to the pie chart, the interesting items in the sector allocation below is the fact that Jennison has been consistently for some time significantly underweight treasuries. But the difference this time is the cash position that they have usually is 1 to 1.5 to 2%. This time it's 12%. So they have repositioned the portfolio in a defensive posture, and that has benefited the portfolio, as you could see by the outperformance relative to the benchmark. I found that interesting. See what else I've got here. Looking at page 19 of 71, of course, we see the huge drop in the last quarter. Looking back through 1982, this quarter was worse than even 1986 and 87. So this has been a significant decline. And actually, if you really look at the quarter, it really didn't start happening until February. So it's really 2/3 of a quarter that did this. All right, looking at page 21 of 71, the rates of manager return by asset class, again, an awful lot of red, 3-month, year-to-date, 1 year. Not up until 5 years are we starting to get some black numbers. Understanding again that the US, the DFA managers, that we have are more small than the benchmark. They are more value than the benchmark. That is done by design. And that can be really seen on pages of 22 and 23, where we can see significant underperformance relative to the benchmarks. As in the microcap, it's almost 4.2%, 1 year 5.57%. But that is the way these are designed. I think when we go out and we look further out, we start to see positive returns again. But for the first 3 months, 1 year, 2 years, 3 years, it's very, very difficult. I don't have anything here. Total plan. I would just like to look at page 27 of 71. Here, the takeaway is the initial left-hand column with the numbers under BlackRock. It's showing the correlation coefficients. It shows that just about everything is running towards 1, which is what happens while the market is under stress. What we'll generally see is a pattern of 1, 90, 85, 80, 70, and you'll see a relative progression down through into the bonds. But you can see that this time everything is headed toward, there's no safe place to hide until you get down into the bonds. It's really about all I've got. Let's go to page 31 of 71. You can see in the grid, the optimal place for the positioning of the assets is, I'll get that, is the upper left quadrant. REEF is there, Jennison intermediate bonds are there. Everybody else, the least desirable quadrant is the lower right, and that's where we're finding most of it. BlackRock is in good shape, but the rest of them severely, severely stressed. That's really all I have. We can go through whatever discussions or comments you would like to make.
So Chris, I'll just make one quick comment, which is that, you pointed out on that page 31 where everybody's in the wrong quadrant, but we have to remember that this was a snapshot of 5 years ending March 31st, and March 31st is very close to the bottom of this period of volatility. And certainly the numbers have changed since then, and in the long run, numbers will probably change going forward.
Yes, I agree.
Any other comments from other committee members? If not, I'm going to the review and approval of the recommended actuarial assumptions on pages 34 through 36, Steve.
Okay, so I will just run through this fairly quickly. We did discuss this at our last meeting. Unfortunately, we did not have a quorum. Typically, we would come to this committee for a recommendation to bring to the City Commission. Due to timing, we were not able to complete that this year without having the quorum in the first quarter. So this has already gone to City Commission. And what we are bringing it back here for is for your consideration and either your formal approval or formal disapproval of the recommendation to move, I think the most controversial portion of this is the investment return from 7.5% to 7.25% for our actuarial assumption. In large part, this is drawn by GRS, who has done a 5-year study. Their new recommendations ranged anywhere from 7% to 7.25%. I will note that they would allow us to have stayed at the 7.5% for now without any qualification. However, they did strongly warn that in the future that may not be the case. Just because of what they're seeing and how they run the numbers, they see that it requires more risk to make 7.5% return than it used to. And so that is kind of the highlight. On pages 35 and 36, I have a summary of the effects of their assumptions and recommendations at different intervals when using the 2018 actuarial numbers, just so we can get an idea of kind of what this looks like. So kind of start is column A here, highlights exactly what we were at previously under our old actuarial assumptions. Column B brings in the new demographic assumptions, which is just mortality tables and other items like that they study as part of our population base, and what that change looked like, purely making only that difference. Column C moves to 7.25% interest, but also a reduced 3.25% wage base. If we jump to page 36, we'll see a CA, which is 3.5% wage base increase and 7.25% interest. The city felt strongly that at the time, a 3.5% wage base was more reasonable and more conservative long-term than the 3.25%. You asked me 3 months ago compared to today what my thoughts are, and obviously in the market concerns could have been significantly different, but we work with the information we had at the time. And so I guess that is the quick summary of what we're requesting here. Is just kind of confirmation one way or the other of this group's thoughts. I do want to re-highlight that this is in no way an indication on the performance that this group has had on the investments. Just kind of from my takeaway from GRS, a larger takeaway of the overall market and the risk it takes to get 7.5% return. So I will open up to questions. Yep.
So just my recollection of our discussion that we had at our February meeting, we had a discussion around these, and while we did not have a quorum, we couldn't make a decision. My recollection is that we said there was a sense of the committee that we would, if we had had a quorum, that we would have approved these recommended changes. And I think what you're telling me is that the pension board ended up approving what's on page 36. Is that correct?
The city commission ended up approving what's on page 36.
Okay, so the city commission approved it. And so the question is, are the committee members, can we have a motion to approve or to endorse the city commission's action to approve these changes in the actuarial assumptions?
I'd move that, Bob.
I hear Dean moving. Sandy, can I hear you supporting that?
I support it.
Yeah, thank you, Sandy. Any discussion from any of the other committee members?
This is Randy. I guess, it seems like it's the cart before the horse or something like this, because usually we recommend to the city commission, and we did have the ability to talk about it, as you said, Bob, in February. And I think it'd be nice to have this motion sort of reflect that discussion somehow, so it doesn't look as if the commission, that we're just endorsing what the commission has finally or come up with.
Okay, so maybe Dean, could we modify your motion to say that based upon the discussion that the committee had in February, which supported these changes, that we therefore support the action by the city commission?
Certainly, Bob.
Okay, I have one more question too. On the page you're showing me, Steve, the 36 out of 71, yes. There's no mention here of, at least I don't see it right away, of the inflation rate assumption.
This, are you talking about the 7.25 or?
No, that's an interest rate,
okay.
Right? Yeah.
The price inflation, Randy, 2.25, that's on page 30.
Yep. Yeah, I know, but you said the board approved page 36, right?
They approved right here on page 34.
Oh, did they? Okay, they
it was
approved
not
34.
explicit. Yeah. Page 36 did not explicitly call out the price inflation. However, it was in those assumptions.
Okay, so they did accept or approve the 2.25 price inflation
Yes,
without changing the wage change.
correct.
And do they say why they would rather do that?
That was just based on city discussion internally with the city. We felt that it was still likely, given out our collective bargaining agreements and the wage increases that are built into those, that 3.5% was more likely than 3.25%.
So why did they not want to go down to a? Why didn't they want to stay at a price inflation of 2.5 if they didn't want to change the wage inflation?
That is a good question. I guess there was not a whole lot of discussion around the difference in price inflation. We kind of went with the GRS recommendation on that, that they were seeing price inflation as being lower in the future than it has been.
Yeah, I think I had a big discussion at that dinner at night.
Yes.
Why GRS did not change the wage inflation, they changed the price inflation.
Yep.
Yeah, okay. Just want to make sure there wasn't some more information that could enlighten my my view of that.
Okay, so just going back to where we stand, Dean, you agreed to the modification of your motion, is that correct?
Yes.
And Sandy, would you agree to to support the modification of the motion?
I agree.
Thank you,
Bob.
Sandy. Any other discussion among committee members?
I just have a quick question, if I may. This is Chris. The negative means then the employer contribution requirement still is essentially zero. You're not going to require, the employer will not be contributing, correct?
That is correct.
Okay.
Any other comments or questions?
Nope.
Then I'll call for a vote. All those in favor of the motion signify by saying aye or raise your right hand or both.
Aye.
Aye. Anyone opposed? Then the motion carries. Steve, I think we dealt with that. Let me find myself on. Okay, so we're now going to Steve, for you to review expenses on pages 37 and 40.
Okay, yep. So this is the fourth quarter expenses. As we can see in the right-hand column here, or second to right-hand column. In reviewing these, nothing outside of the ordinary. We had slightly larger than normal plan withdrawals in the fourth quarter. As we kind of noted in the third quarter, we have a new retirement services manager who has been going back through and really doing a lot of cleanup from the past, which has been really helpful in ensuring that people are either withdrawing their funds or making their election to keep their funds. Some of those had dropped off under the previous coordinator. We do expect those to start normalizing as we move forward. Aside from that, I would say, we have the normal consulting and audit fees for third quarter, consulting fees, the State Street custody fees. They are still, I will continue to make a note, while their amounts are fairly similar to other quarters, they're still a little bit behind on their billing. We only had through October for the fourth quarter. But they've gotten a little bit closer over time. And so the total expenses for the pension system is $7,807,333. I would like to continue forward here. We do also have the investment manager fees. Those again, all fairly standard, nothing outside the ordinary from expected. And those total $472,213 for a total of $8,279,546.
Okay, so could we have a motion to approve those expenses that were reviewed by Steve?
So moved.
Support. I have motion and support. Any discussion?
Just a quick question, if I may. Steve, on the county's expenditures, they had 58,000 for a experience study by GRS, and I take that was the one that came up with the recommendations.
Yes.
Where do we see that here? Did you share the expenses with them?
I believe that's in our first quarter of the
Is that
following year.
first quarter?
Yep, you'll see that here in the next.
Oh, there it is.
step
Okay.
here. So
Yeah.
this is just the fourth quarter of last year.
So okay.
And can I ask who supported the motion?
It was Dan.
I think.
Dan? Okay, thank you.
Steve, this is Dean. I have one other quick question. So the custody fees, are those based on a percentage of assets under management or not necessarily?
It's a mix. It is a percentage of assets, but also there is some base fee baked into there.
Okay, so to the extent the assets are declining in value, we will get a little bit of a price break.
Yes.
Okay. Not how you want to get it, obviously, but just wondering.
Okay, any other discussion? Steve, I think we have to do this one by roll call.
Okay. 1 moment. Bob Salisbury,
Yes.
Randy Eberts,
Yes.
Dean Burgee,
Yes,
Dan Dement,
Yes,
and Sandy Doctor.
Yes.
Thank you.
Okay, Steve, let's deal with cash flows.
Okay. So just looking here at page 41, we have the cash flows for the pension system. I will zoom out a little bit. I would like to jump around a little bit here after I cover this to the OPEB system as well, just to cover cash flows at the same time.
Okay,
We have modified this report. Again, it continues to be a work in progress, trying to get a format that the committee agrees with. So to the point here, we have our standard receipts at the top, employee contributions, miscellaneous income, and then we kind of jump into our disbursements where we have benefit payments, everything pretty well on target with expectations for the first quarter. We have admin fees, and I'm trying to see. We do have one highlight. The State Street retiree fees has a negative line here of $7,250. That is a postage reimbursement from a prior year charge that was they miscalculated, and we've been working with them for the past couple months to get that finalized, and we finally have. And so that covers the direct cash flow, not considering liquidations from the investments. So we can kind of see all the ins and outs and how, I will highlight how reliant we are upon the investment cash flow for these systems. Moving to the bottom section here, we did keep, I thought it was useful to keep a section of investment activity to show what we were bringing in investment income. Good portion of interest and dividends, which actually, perhaps we need to take a closer look at our budgeted dividend amount, but that was kind of based on prior years, and the first quarter here seems a bit low for this year. And then just kind of walking through, we have our realized gain and loss, which is, what we were able to sell and transfer out. You can see the realized gain at 9.4 million and our liquidation transferring out. I guess to that point with the new format, does this seem to be more of what the committee has been hoping to see?
this is a very helpful format. I think you can see the direct cash flow is much easier, but I like the ancillary information on the bottom so you get a full picture, Steve.
Okay. So that would be the cash flow for the pension system. I'll jump a few pages down here. We have the cash flow for the OPEB or healthcare system. Very similar. Still have employee contributions coming at the top. Those were pretty much on par with, those are exactly on par with expectations. We did a little better job of being able to project those. Healthcare benefit payments were down for the first quarter, which was a nice little break that we had. And then just kind of moving through overall first quarter, we were a little under budget expenditures. So that was very helpful given the investment side of the picture. Any other questions on this portion?
I guess, Steve, just a quick one. We have to pay off that loan, right? Where's
Yes. So that loan is currently sitting at $81,305,000.
Do we have a monthly payment or quarterly payment on that?
An annual payment with principal and interest of about 5.4 million.
Where is that on this page here? I was just
That does not come out of this system. That is paid by the city and other participants
Okay.
out of the general fund budgets. So we do cover the portion of the loan for that.
Okay, so that's on another, someplace else.
Yes.
In general, are we covering all that, or how are we doing with the OPEB?
This fund has done very well. Obviously, we took a hit this quarter. Coming into the end of 2020, we had 102 million. So we had taken that initial bond and were able to reinvest and pay off benefits and still walk away with extra funds. To that point, even with the dip today, we're still slightly above the balance left on the loan. So that's a good sign. We hope that everything can kind of bounce back here and continue the past trend that we've seen over the last 5 years.
Okay, thanks.
Okay, any other questions of Steve on the cash flows? So do we need to do another approval of expenses on pages 42 and 43, Steve, or did we already cover that?
We will. I will cover that now. So jumping backwards, it's actually going to be 42, 43, and 45, 46. We've separated out the expenditures as requested after last meeting. So here we just have the expenses directly just for the pension fund. We can see the beneficiary payments, the admin fees, the actuarial costs. That's where the experience study came in at 22,000 for this system. And we were largely the difference there is that was split between the two systems because it did study for both systems. So you can kind of see the pension expenses at 7.8 million. Moving on, we have our investment manager fees for the pension system at another 525,000. And I just realized, okay, yep. And we're making for a total of 8.4 million for the pension fund. And then moving down to pages 45 and 46, we have the OPEB or healthcare fund expenditures. You can see the total there with retiree benefits and other expenditures related to that fund as 2.7 million. And then also their investment manager fees at $79,328. And then the total OPEB expenditures at $2,791,058. And then
So Steve,
yes.
My understanding is that what we previously approved were the 2019 expenses. Now we're dealing with the first quarter of 2020 expenses. Is that correct?
Correct.
Okay.
And so we'd
So
be
could
looking
we
for
have-
approval for both of those, the 2.7 and the 8.4, if I remember, if I had that correctly in my head. 8.4, yep.
So could I have a motion to approve the expenses of Q1 2020?
So moved.
Support.
Motion by Randy, and who was the support?
Dan,
Dan, okay. Any discussion? Then Steve will do a roll call on those.
Okay. Bob Salisbury,
Yes.
Randy Eberts,
Yes.
Dean Burgee,
Yes,
Dan DeMint,
yes,
Sandy Doctor.
Yes.
Okay.
Okay, thank you. So Steve, I'm watching the time and I know that we are scheduled to start the FFE meeting at 10:45. What kind of flexibility do we have in terms of starting late, or should we try to start right on time?
I believe we will be okay if we start a few minutes late. Clyde Robinson, city attorney's on the line. If there's anything different, please let me know. But I believe that we can finish up here and start that meeting a little bit late if we have to. Okay, so yeah, I think we're good to continue and we can finish up our business here prior to moving to the next meeting.
Okay, we'll try to move along fairly quickly. Anything to say on the audit, Steve?
No update. It's currently occurring. Should be ready for June 30th. And so we should have an update for next quarter.
Okay. Chris, can you quickly deal with trip reports and future due diligence?
All right, the trip reports, we saw Luma Sales and we saw BlackRock. Both are functioning the way they're supposed to and performing and managing the money the way we hired them. As far as the future travel, everything has been postponed. What I would like the committee to do is to say that, to have a motion to the effect that we will conduct due diligence and education by electronic means until such a time as we feel comfortable as resuming in-person visits and trips.
And can we just say that as so long as it's allowed, well, due diligence is something that we do as an internal committee process. So could we have a motion to approve Chris's suggestion that we do future trips electronically until we're traveling again?
So
So
moved.
moved. Support.
Looks like Randy moved it and Sandy supported it.
I'm good, thank you.
Any discussion? All in favor signify by saying aye.
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 Anyone opposed? Okay, communications, anything to add, Chris?
No.
Okay, on old and new business, reallocation, we've begun having a fair amount of discussion on the subject of reallocation. And the conclusion that we've come to as committee members is that we need to do a fair amount of research before we make any decision on special reallocations. By background information, we do regular reallocations through our liquidation process and the year-end reallocations that we do to meet the regulatory targets. But for special reallocations, there's been some discussion about whether we want to change our policy. The committee isn't prepared to do that at this point in time. We've decided we need to do more research from various external sources. And so we'll continue that discussion and move along forward with that further. Is there anything that you want to add to that, Chris, or is that sufficient just to?
No, that's covered it very well, Bob.
Okay. In terms of RIC recruiting, I'll note that we lost one member in recent months. That was Jan Vanderklee, a very long-serving member. And we are going to reactivate our recruiting with the goal being to have one or two potential candidates participate in our August meeting as an observer, as a potential person to join us. Follow up on the Burgee request about to update the city's debt to include the OPEB borrowings. I think, Dean, did we cover that in the discussion that we had that Randy asked a few minutes ago?
Yes, absolutely, Bob.
Okay, thank you. PCIC report, Chris, can you give us a quick summary of that?
All right, let's see if I can find it.
So Chris, rather
Can
than
everyone
going
see
over,
the new file on the screen, or do I need to change this?
no, we can see it, Steve.
We can see it, Steve.
All right, I don't think we have to go through this very much. I'll read the first paragraph, the last paragraph, and that's it. During the first quarter of 2020, the perp care assets decreased from 3,896.24 to 3,499.311, a dollar decrease of about 391,000, or down about 10.6%. If you can recall, that's much better than what we did in the city portfolio, but this is a 50-50 portfolio, and that's what you should expect. There weren't any additions or withdrawals. Let's see, and withdrawals equaled about 80,000 during the quarter. Since the transfer from a book entry account at DFA to a custodial account at Schwab, the assets have had a nominal return of 5.04% on an inflation adjusted or real return of 3.16%. I really don't have anything in here. Again, it's not as draconian, as bad as it is, it's not as draconian as the 70-30 split, which is just the way it's designed. That's really about all I have. It's very straightforward.
Okay, any questions for Chris on the PCIC report? Future meetings are listed on the schedule here on the agenda. Before doing around the table, Steve, I think we need to do the public comment. So let's have you take care of that, please.
I've been informed that there was no public comment, so we can just keep moving on.
Okay, that's terrific. I'll do a quick around the table. Randy, anything?
No, thanks.
Dan?
Up.
Dean?
Bob, I mentioned this at previous meetings, but I am retiring from Stryker effective June 30th, and I've informed you guys of that. It doesn't change my desire to serve on this committee or any of my, where I'm going to be living personally or anything like that. So.
Okay, thank you. Sandy, anything?
Nope.
Okay, I'm going to adjourn the meeting, and hopefully we can find the link to the FFE meeting. And Steve, if you can resend those. For some reason, mine keep disappearing.
Yep, just adding, we did resend the links during the meeting around 10:12. So should be able to, hopefully those are in your inboxes for the next meeting.
And Steve, they came from Neil Conway, right? Is that
Correct, thank you.
Yeah, but
Yes.
for some reason, I'm not getting them, Steve. It's really funny on some of one of my devices, I get them, but on another one, I don't. I don't know what's going on, but I'll sign off this and hopefully we'll be on in a minute.
And
Yeah,
I will have Nina Porter forward you one. Does anybody else not see theirs before we officially
I
sign
never
off?
got one from Neil Conway. I don't have any email from Neil, so. Ever.
Okay. I will have Nina forward her invites on to the two of you for now, and we will try to get on the next meeting.
Okay.
Okay.
Thank you.
Thank
Thank
you.
you. Bye.